Welcome, everyone, to another RLT Pivot podcast. My name is Tracy, and I'm so glad you can join us today. I'm here with my co host, Dan Jansen. And before we get started, just a reminder that if you find value in what we do, please hit that like button, hit that subscribe button, and don't forget to hit the notification bell. Our chat is live right now. So if you have any questions, please throw them in there and we will get to them as soon as we can. Are you all here excited to find out how to grow a small account? I think Dan is. What do you think, Dan?
That's why I showed up today. That's why I came in today. I need to know. I need to know. But so it's a question that we get a lot. That I've a lot of people in my mentor group, a lot of people that are just not in the market, and especially with crypto blowing up a little bit, like people like starting to not only see the crypto side of things, but they're also seeing the stock market as opportunities, and a lot of the at least theory is that you need a lot of money to make a lot of money. I personally,
No. You're gonna have to repeat that because I think we lost you there for a few seconds.
my internet cut out. Oh
Yeah.
man, that was a good line too. But no, yeah. So I started my account with $5,000 back. It took a while. So if you what you're really doing when trying to grow your account, you're trading gains with time is legitimately what you're doing. If you have enough time on your side and you don't want to come in with $5,000 like I do and just expect to be a millionaire within a year and a half, you could grow your account substantially just over time and build it up. So there's definitely challenges to growing a small account that somebody with a much larger account has a different luxury to do. But yeah, it's very possible to take an account of, and it doesn't have to be 5,000, it could be any size, but to take that account and begin to grow it. So it's definitely possible. You don't need a lot to make a lot.
So you started out with a $5,000 account. Is that what you started out originally when you first started trading?
I blew up a couple $5,000 accounts, yes.
Okay.
But so primarily, really, instead of paying for education, I paid for market experience, which turns out to be a lot more than the education was. So I just tried to get into it. I watched a couple YouTube videos. Felt like, yeah, I could do this. It makes sense. Buy low, sell high, right? How hard could that be? So what I did was I took the $5,000 account. I played around with it. I had some good days, some bad days, and I think it was two or three times I blew up the account, and then I was like, all right, let me look at actually how to trade. Let me see if I can figure out. And that's when I found real life trading and made some good moves just from learning that even with a small account, you can protect your risk and be able to take what you have and put the time into to actually grow it into something worthwhile.
Now, do you think that everybody that has a small account needs to blow it out to learn these lessons?
It helps. It helps. No, I honestly don't. So again, the way I did it was
All
out a
right.
little bit, but
We
unfortunately,
You want to repeat that
am
because
I lost?
we lost you again.
Yeah, I keep getting cut out here. I'm not sure if there's a storm coming or whatever, but yeah. So you don't have to go through the life lesson of blowing up accounts. I was fortunate where and the accounts that I did blow up, they were very little accounts. So there's people that come in with the same type of bullishness, I guess, to hop in on themselves on trading the market that come in with a much larger account. And a lot of times, those people that get aggressive with the market, they blow up their account of much larger sizes to the point where they can't come back. So it's all about, like, for me, it was 5,000. Okay, great, and I'll make the money back and get back into it. But if I came in with $100,000 with the same education level in the market, I probably wouldn't be here today.
Right. Right. No, that's perfect. I started with a $6,000 account personally. Um,
Nice.
yeah, but I was trading
It's
futures
you,
at
Bill
that time.
Gates over there. $1,000 more than me.
Yeah, but I never blew out an account either. So it's
Yeah.
that's one of those lessons. So I don't know. Maybe I need to learn that lesson. I'm not
No,
hoping
no,
I already know it.
you're too far down the road. Yeah, don't turn around now.
I don't want to blow out the account I have now. It's way too large.
Yeah.
So, but yeah, no, I started out with a small account, a $6,000 account, and it took me a while. I mean, I was playing with a $10 R for a while because not because I needed to. I mean, technically, if I went with the 1% of my portfolio, I could have been playing with at least a $60 R. But I felt comfortable with the $10 R, and I remember making that first trade. And I talked about in this one of the first episodes. My hands were shaking, so I felt really comfortable getting in there with just a $10 R and playing it that way and safely until I felt more comfortable. So I took my time getting in, and I think that's what protected my small account and made it last a lot longer. And I mean, a lot of that account was getting chewed up with fees for
Right.
the platform and all that kind of stuff. But I never actually went to zero on it. I went down a little bit with it because I wasn't winning coming out of the gate, but I was able to practice with real money for probably a good year, year and a half before I started to really get good at it. And
Right.
um, and then I was able to increase my account and increase my R and all that kind of thing. So now I'm just curious because I'm following you guys. You guys are doing a challenge right now, right? A 5K challenge. Do you want to tell me a bit about that?
Sure. Yeah, we got Jeremy Newsome, we got Tony Pollock, and myself. We each opened a brand new account. Really kind of taking me back to the roots of where I started, but we took $5,000 each. We opened a brand new account, and we're it's a 12-month challenge, and we're trying to see how we can grow it. The interesting thing with the challenge is myself, Jeremy, and Tony have very different strategies as far as what we do to grow the account. And I don't think any of them are wrong. Honestly, there is no wrong way to do it. So with Jeremy's trade, he took a play on Tesla where he just took his entire $5,000 account and put it onto a call option.
Hmm.
But with that play, he still had a stop in, so the worst he could lose is $1,000. So he's got a big upside to it, and he most likely probably sold out prior to even a couple days ago. It did make a nice move since he got into it, so we'll see what the new update video is that Jeremy puts out. But so that's one way to do it. Tony is doing more credit spreads, so I know he took his first trade. I think he won like $400 or something like that off a credit spread from I believe it was Netflix. It was either Netflix or Tesla. I believe it was Netflix though. And then for me, I'm going a little bit more conservative. So I'm taking I'm doing a little bit more shares to try to get a couple small wins in, while also doing like a leap or something that I might be bullish on that I could wait for. But for me, the whole strategy is take the leap where I can have some serious gains, but also with the shares be able to pay for that leap. So essentially, ideally, what I'm trying to do is get a free leap that could give me returns with a zero downside to it. And then once I get to that point, then it's all right. Well, I'll see what happens, and I'll let the time do its
Well,
comes back.
you guys are gonna have to bear with us because Dan is having some technical difficulties with his internet today, so he might kick in and out, on and off. We lost you again for a second.
Am I back?
You're back. Yep,
It was
you're
a long
back.
it was a long second though. It was. I felt it. I felt it. So yeah, so it's a very interesting strategy. The thing that I would say why I blew up the first couple accounts with putting 5,000 in is because I had a different mindset. And I think that's really what it comes down to. Um, I wasn't utilizing the time that I had to grow the account. I just wanted to take the 5,000, hit a big play, feel great about myself. And I think a lot of times once you're coming into the market and that's your mentality, that's when you can hit some good trades, but a lot of times there's that downside of just kind of wiping out. So I had to learn that lesson a few times, and then once I realized, all right, well, I could protect the risk in order to grow that account. That's what I think made me just a much stronger trader. Not just even looking for the indicators or the reversal signals or anything like that. It was more so the risk management portion of it. Um, you have to have money in the account to grow the account. And if you wipe it all out, you're at ground zero again, and you're just trying to figure out how to come back. So
Yeah, for sure. We say something at Real Life Trading all the time, and we talk about patience, and we actually spell it with a Y. So we spell it PAY, Shins. And I think that's even more key when you have a small account, that patience. And you've been talking about that mostly. You need time, and it's going to take time. So as long as you do that and you're patient and you protect your risk, what are some of the, I guess, one of the concerns that I see, at least the way that you guys have been presenting your trade so far, some of the risks are a lot more than 1%. And I mean, in Jeremy's case, for instance, that's a 20% risk if he's got $1,000 on that. Um, How can you, I mean, because he's a seasoned trader. So most people that are going to be trading with a small account, they're not seasoned traders. They're newer traders. How can they, um, I guess, deal with that concept of that it might take 20% to put at risk? Like, what are your thoughts on that?
Yeah, 100%. So usually we're saying reduce your risk as much as possible coming in. I think you hit the nail on the head. Jeremy is a seasoned trader. I've traded once or twice before, and so has Tony as well. So like we have that education now already stacked in our own trading styles. So we understand the risk that we're taking for each trade. Um, and honestly, the entire idea for I think what we're trying to do is just not blow up the account, right?
Hmm.
We're just trying not to blow up the account. So we have some kind of risk management to it, but we are taking a little bit more aggressive. The hardest thing to do when you get into the market is make your first dollar, right?
Hmm.
So 'cause that you're actually risking your own money at that point. But if you're able to get past that point, and even if your account's up 10%, so $500, that's an extra $500 where if even if the next play you take is $1,000 risk, you're only really risking $500 of your own money in that play. So essentially it becomes easier the more you build it. So I think it's kind of the out of the gate type play. On a day trade basis though, we're all of the trades that we're taking, they're a little bit more time valued plays. So even Jeremy and Tony Tony's credit spreads, it wasn't an in and out type trade. So if we were to go in and out and we're looking for using a lot more margin on the play, we would definitely have a reduced risk for like a day trade purpose. But we're not using none of us have used any margin for any of our day trades yet. So we understand that we could lose obviously what we put in or a decent portion of it even if we get stopped out. But we know
No. So basically, what Dan is saying right now is that on day trades, don't over leverage yourself. Keep it small, and knowing that for the swing trades, they're going to take a little bit longer. They've given themselves a bit more room to work, more time, and they're allowing a little bit more of a drawdown during that time. Now, Dan, are you back with me? I think you are.
I'm here. Yeah,
Yeah,
did I cut out for a
perfect.
second?
Yeah, you
Okay.
did. Yeah, you did. So, quick question for you. What would you say are some of the tips for a newer trader that is trying to build a small account then?
Can you say that one more time?
What are some good tips to give to a small account holder that is just newer to trader that isn't seasoned like you and Tony and Jeremy? How could they get
Yeah,
started?
yeah, great question. First of all, what I would do is be comfortable with the money that you're putting in the account, right? So if you're doing a $5,000 account and that's all the money that you have, you're gonna trade a lot differently than if you have 30, 40, $50,000 to your name or $100,000 to your name, and you're going with a small account of whatever size it is. So anytime you take any trade, there's going to be some type of risk. Um, with be cautious. Understand that you can take a loss on that first trade that you take, the second trade that you take. But if you're not risking the entire account, you're still in the game. And so it's just make sure you plan out this move of what you're taking, and then have a secondary move, right? So have if this doesn't work out, what's my next play on this trade? And if you could kind of think a move or two in advance, so we'll go with Amwell, which is AMWL. I know it's probably not the most welcoming trade that I've taken. That was the first trade in the account. It's a stock got completely beat up. The company itself very speculative for sure. But with that trade, what I was looking to do is just put $1,000 on it, just because I like the momentum into that trade. And I wanted to go with 100 shares just because my next move on it was if I get some kind of massive run or something like that, I might have the opportunity to do a cover call against it or some kind of option strategy in regards to that play. So I actually sold out today. I made I don't know $114. So out of the initial 1100, about 10%
Uh,
profit.
on Amwell, not bad.
On Amwell, exactly. So, but again, it's not even about the $100 because the $100, I mean, is not life changing money. But putting in $1,100 and making a 10% return on it, 10% is a good return for holding something for a week or two, right? So now I'll just let it do its thing. If it flies to the moon, it does. I've locked in the profits, and that's going to help me on the next trade. Not so much it's not trying to double my account on the one particular Amwell trade. It was a move, again, $1,100, but my stop on it was probably about $100.
Okay.
So very, very small risk. If it didn't work out, if the company just kept sinking, I would have had to stop in place and been able to pull out. So it was just a trade that I just managed to just get a little bit. So inherently making my next trade a little bit less risky.
Gotcha. So you've increased your risk to 2%. Is that correct? Is that what you're risking on day trades or swing trades?
On day trades, I'm at 2%. Yeah, on day trades, it's
2%.
2%. Correct.
Okay. Okay. Do you think it's possible to grow a small account using that 1%, playing with a $50 R?
Yes, 100%. You can. We have for the challenge purpose. We do have a year on the account.
Yeah.
So I'm going with 2%. Uh, Anytime you're day trading, the max you should be risking is 2% of your account. So if I was to get in for a day trade purpose, it's 2% risk on the actual trade of what I could lose. But we have some time to grow the account, but less time than if I was to live longer than a year. So if I was to start with my account and just look to grow it, I have indefinite time. Like as long as I'm still walking around Earth,
Okay.
cut out
I'm
again.
gonna. Yeah. You happen again. So no, I totally get it. Dan, what do you have any other tips that you'd like to give?
Just take take the route of getting educated first. Don't go the route of taking the lesson from the market of hard knocks. Like just even though losing a small account is not the end of the world, there's no reason to do that. But it was just something that I wasn't even aware that there was really education online besides like a couple YouTube videos or a couple trading books that I read or something like that. But I didn't really understand what education was when getting into the market, like just the entire full picture of everything. So I wasn't very sure. I see Dean's comment. Yeah, I gotta get this Starlink, Dean, for sure. Yeah, I don't know. The internet's cutting out today, but maybe I could finally take the small account, make it big enough, and buy a Starlink. I guess that's
There
that's
you
really the
go.
goal here.
That's awesome. That's awesome.
Yeah.
I personally, the other tip that you can do, if you're working and you've got a small account, try to put small deposits into that account and help grow it that way as well. Because the bigger you can get it, the more room that you have.
Yeah.
Um, that you can risk the same amount but not blow out your account as fast. So you'd be wanting to try and build it in every way that you possibly can. That's the idea, and get it up to a really good quality size account. Okay. So that's one of the tips. The other thing that I would give you as a tip is perhaps, trading companies that trading companies that you trust, trading companies that you recognize how they earn money and make money. So I'm pretty confident when I put money into Apple that it's going to go up. So that's it may not go up in the short term. It might have a pullback, but in the long term, I think it's going to go up. Same with the SPY, things like that. Would you agree with some of those things, Stan? No, I've lost Dan again. The other thing that I would highly recommend is that you. Oh, Dan's back. Did you hear
I'm
me?
back.
Okay. Did you
I
have
I
anything to
did,
add?
yeah.
Okay.
I did, and I agree with you. I like the strong company approach, and again, having time on your side. So the market could pull back 20% tomorrow. I have zero idea, but the Apples, the Teslas, the Salesforce, the CRMs, those guys they're not going anywhere. They've been around. They've proven themselves. They make money. I know what they do. Most of those guys pay dividends. Coca Cola, like those companies, I like. So you could take a portion of your money of what you're doing and just invest it into those companies over time throughout the first year, the first 2 years. And it could be $100 to $200 a month from your initial investment, and then work on trading the rest. So now you're kind of building up that portfolio where, I mean, what's the worst case that's going to happen is the market pulls back and you're down a little bit and you just wait a little bit more time. Like eventually those companies are going to be fine again. So you have that kind of growing safety net, especially if they have the dividends. Now you are making a little bit. But if you're looking to trade the account, Yeah, you're still gonna have to watch the charts, get the education as far as when the right time is. Not make sure you're not buying those companies at all time highs, and then the wait period is just gonna be a lot longer for you. So it still comes down a lot to the timing that you're looking to get into things as well.
Right. Right. Absolutely. Now, I know a lot of small account holders, they have issues with playing companies like Tesla or companies like or Shopify, I should say. They're they're concerned because the value of the actual stock is so high they don't think that they can play them. Is that just a myth or is that a reality?
No, so when it comes to stock price, the actual price doesn't matter. The you could have a company that you could have a company like Amazon that's $3,500 a share, or you could have a company like Neo that might be $35 a share. The
The risk management ends up being exactly the same. So when you actually calculate your entry and your stop place, it gives you a specific amount of risk. And that's what's on the table. So when you calculate
Right.
that out, you might only have one share of Tesla, or you might only have one share of Google or Amazon or whatever it might be. But the risk is still the same. So if it goes down that, $6 or $10, that's where you end up losing that $10
It
versus,
right. If
yeah.
you have $3,500 in one share of Amazon and you have $3,500 in Neo, if either of those companies drop 10%, you're down 10%. So it doesn't matter how many shares you have necessarily. It just matters, is that company overvalued or undervalued when you're buying in? Has it already made a just 300% profit in the last 3 weeks that maybe you should probably stay away from that company and look for either a much bigger dip or just have the patience like you talked about before
Mhm.
to get in.
Yeah, for sure.
So what
Absolutely.
would you? So I know you came in with 6,000. Did you take a lot of the education prior to your trading? I know you started off very slow, which I think is a very good approach.
Well, no. So what I paper traded for a long time, and then I opened up a futures account. So I had an AMP account down because I started trading futures. But what I did is I paper traded in that. So a lot of the money that I put in the account was actually being chewed up with the fees, the monthly fees for the platform, while I paper traded live in that platform. And then I went to real money where I was trading real money. But it took probably, I think I did about a year and a half of watching. And as I said in one of the further or earlier episodes, I actually came across real life trading really early in my education. So I was very thankful for that. And I did all the education first, and then I started paper trading with TradingView and back trading. And I spent a lot of time in front of those charts. I probably back traded, I would say easily 6 hours a day for a good solid year before I placed my first actual trade. Now I was able to do that because I had nothing else to do. I was home with my leg up. I was in a wheelchair and using a cane. 6 months later, so I couldn't do anything. I had to lay on the couch all day and keep my leg up because it would swell every time it would be put on the ground. And I had all that time. So instead of watching television, I reinvested my time into myself by learning the stock market. And I did that by taking the classes and then spending every minute I could back trading and studying and trying and practicing. And then, like I said, then I moved money. I was getting ready to start the account, ready to start trading real live money, and I opened an account and practiced day traded, but practiced um, before I actually placed a real trade. So yeah, I did take it quite slow. It's probably 2 years before I actually placed my first actual trade. So
Well, I
yeah,
love that. I love that true definition of patience. Like that's hard for a lot of people to sit there practice for 2 years and not place a trade. But
it is.
again, you haven't blown up an account, so it works, right? So you're gonna get people that just want to come in and they're just trying to make money, and it's if you don't know how to manage the bankroll, and then on top of it, if you're not going to spend the time learning, educating yourself, it does become inherently very difficult to be able to grow an account without blowing it up.
Ask yourself, how long did it take you to earn that money and save that money? Ask yourself, how long did it take me to save that money? And once you know how long it took you to save that money, you should be at least able to exercise that kind of patience so that you don't lose it in that time frame,
Yep.
right? That's my
Yep.
that's my rule. So, uh, now, quick question, because you live in the States, I live in Canada. You have the pattern day trade rule. We
Yes.
don't. Do you object to uh, going with a broker that is outside, or a foreign broker for you guys, to get around that pattern day trade rule?
You can do that. I did not. I I would actually. I know people want to get around that rule by going to a Cayman Islands account or whatever. I would say the pattern day trade rule is annoying, but it's also a blessing. Like coming into the markets without having that, it kind of forces people to really hold for the trades that they like a little bit more. And people still might not like, they'll still just be like, cool, I could take 3 day trades today. Let me do it all today, and then I'll go a week without trading, whatever. But it is there for a reason. It is very annoying on a lot of aspects, but I think if you're taking more than 3 trades in a 5 day rolling period and you're brand new to the market, you're probably over trading in the first place,
Mhm,
especially if you are coming in with a $5,000 account. You don't need to make a lot of moves. That's the other thing. The perception of people trading is they got to be trading every day to make money. I think one of the best pieces of advice is don't trade that much. You don't need that many moves. You could sit on a trade a little bit longer, especially if you're in shares and you don't have a time decay on your shares as you would an option. If you have that time with you, take the trade that you like, take the companies you like, wait for the setup that you like, have your stops in place, and just relax. Just give it time. Place the trade, walk away. Don't be watching the stock every 2 seconds. Just have that kind of mentality, and you'll be able to grow the account over. Again, it's not about making a lot of money today. It's about growing it over time.
mhm, absolutely. Now, my final question before, because we're running out of time, but this is just my opinion, okay? So you guys can all agree or disagree with me. It doesn't really matter. This is my opinion, but I know a lot of traders that have a small account. They tend to trade options, and I personally think that that is the worst thing that a new trader can do. Um, I think that it's risky, and I know that people want to trade options because it's leveraged and they can make a decent amount of money. But my opinion, and like I said, this is just my opinion, is that if you can't trade shares effectively, you're not going to be able to trade options effectively. And with great reward, there's also big risk. And that's my concerns. What are your thoughts on that? Because I don't think you need to be trading options to grow a small account.
Yeah, I agree. I think that's the pure definition of trying to make a lot of money quick. You're literally spending money to reduce your time.
Hmm.
You're buying an option, and you're saying, instead of me having infinite amount of time for my trade to eventually work or make the move that I want, you're trading the time. You're paying to lose time on your ability to trade. So yes, you can make money. You can be leveraged on your options. You can be leveraged in the market with shares, but honestly, you don't. If you hit a good trade or two, yes, you could grow your account quickly. Um, that is also the riskiest way to do it. And like you said, if you don't understand the actual stock market, you don't understand when the right time to get in for shares, you're gonna have a very difficult time. It's a whole nother beast trading options. So you definitely have to know what you're doing. And I would highly recommend doing shares, especially brand new to the market. Take the shares, have the time on your side. Don't give up the time value, and it's just not worth the risk, because it is an easy way to blow up your accounts, is getting into the options, not knowing what you're doing.
Absolutely. Well, everyone, we appreciate your time. Another episode has gone by really fast. Dan made it really quick for me with all his cutting in and out on his internet. So hey, it was it was all
I
there.
think we shaved like 5 minutes of the episode of me cutting that.
There you go. But thank you everyone for joining us. And Dan, you can take us home.
All right, team. Well, appreciate all you guys once again for joining us for another Pivot podcast. Thank you, Tracy, for being with me, co-host.
co-hosting. If you found value in what we did, remember, hit that subscribe button, hit that like button, and don't forget to hit the notification bell. And if you want to learn more about how to trade or check out any of our mentorships or anything like that, come on by to www.reallifetrading.com. We'd love to have you there. Okay. You guys rock. See you next week.